Hello and good afternoon. So this week we are going to be discussing Fife house sales and how they're up 4.2% as interest rate falls. But before we get into that and we discuss further, let's run VT.
That was close.
Nearly. I know. I was watching you coming back then.
It's interesting because this comes on the back of unexpected inflation figures up to 3%. Wage negotiations still at 3.4%, which is outpacing inflation. You have the reduced likelihood of an interest rate, base rate interest rate cut coming as a result of that. And that's predominantly driven by the VAT on the education fees, the cost of meat and food and bread and all the rest of it as well. And then we've got another hike to come along, and for inflationary figures is the utility prices coming soon as well. So it'll be interesting times ahead. I think that reduction of interest rates is maybe disappearing on the horizon, so to speak. UK house price index, Scottish house price index out today as well. We'll talk about that as well out throughout, and we'll give a heads up. But it's, last week, as we said, the Bank of England's interest rate had dropped to 4.5%. Everybody's going, yee, quarter point reduction, especially if you're on a tracker. And interest rates, I think, have actually come down to, you're getting mortgages, obviously higher, lower loan to value mortgages, in other words, 60% loan to value. You're getting around about less than 4%, sub 4% now, which is actually quite good, and it will stimulate the housing market and keep it going. However, Scottish house prices year on year up to December 2024 are up 6.9%.
Wow.
That's actually, exactly. That's what I thought as well. Wow, that's bizarre. Really bizarre, because I didn't expect that to happen. And Fife house prices, for example, are sitting up 4.3% year on year. However, I think there's a lot more to come through yet, and we'll discuss that on the way through. Average house price in Fife, according to the Land Registry, is £169,143. Still very affordable overall.
Absolutely.
Yeah. So the decision with previous reductions in November 2024, with the rate remaining unchanged in December, while the most of the bank's policymakers supported the move to 4.5%, a minority favoured a more aggressive cut to 4.25%. Thank goodness they never did that, because inflation might be worse as it was before, highlighting the ongoing uncertainty, definitely uncertainty on the horizon with what's happening right now in terms of the economic data out today, right across the board for house prices, for inflation, and for wage negotiation as well. Now, the decision is widely seen as a positive step in the housing market. Lower borrowing costs, the obvious, could improve affordability, boosting confidence for home buyers and those looking to remortgage as well. Activity levels in the property sector have already shown improvement, with increased buyer registrations at the start of the year, which is usually what typically happens. However, while the sentiment may improve, the immediate effect on mortgage rates is expected to be, it was gradual. You do get some deals, as I said, sub 4%, and lenders responding. They are definitely cautious to the new environment. The trajectory for further interest rate cuts will depend on broader economic stability. Now, this was written a couple of days ago, and as of today, it's disappearing on the horizon, I would say. Although inflation is lower than last year, it's still a key factor in influencing monetary policy as the data out today. And while there's optimism that additional cuts could fall in 2025, economic volatility means nothing is guaranteed. I still think the think tanks have got it wrong. I could see a slightly different picture for the outlook in the UK economic conditions and the housing market as well. but the latest rate cut is expected to boost the confidence in the community and in the property sector. And I kind of think it has, hasn't it?
Yeah, I would say, and even from the shows that obviously we do the Fife Property Weekly Market Update, and we obviously disclose the activity that we've been taking place. And even that, I really do like to highlight how many first-time buyers are still coming onto the market as well. That is such a big thing. There was one week there was about 3 or 4 of our sales from the previous week was first-time buyers, and they were high price points as well. They were above kind of your average of 169,000. They were actually started with a 2. So it just does show you that there is an element of, confidence in the property sector. Absolutely.
Well, we need the first-time buyers. We need the first-time buyers. We need investors as well, the landlord, because they buy at the bottom end as well in terms of the price point, because it's obviously a better return and a better yield, and it's an easy exit as well for them as well. But we need these people in there to do that at the bottom end of the market, because that stimulates everybody on the bottom end to move up to the middle market, and then the middle market to move up to the upper market in terms of the percentage quartile. So that's important, and the upper market will move down to a more affordable level, maybe the middle market, and because they're downsizing, because they don't need a huge house anymore. And I think that's the most important thing. First-time buyers and investors are literally the lifeblood of the housing market.
Absolutely. So then what does this mean, for Fife homeowners and buyers? And we're going to look at that. But something we do just want to say is, obviously this is live. Feel free to put any relevant questions in the comments and we will come back to you. Likewise, if you're watching the rerun again, comment and we will come back to you. Obviously relevant questions, but yes, any questions, fire them at us. So what does it mean for Fife homeowners and buyers? Now, the UK property market was already showing signs of resilience in January. So this could perhaps benefit with the, as Jim's touched on, this was written a couple of days ago. Obviously there was then that came out today. However, sustained growth later in the year and beyond will depend on those wider economic conditions and how quickly lenders will adjust to mortgage rates in response to that. Now, what we're going to do is, because this is almost also like a January update, is we're going to look at facts and figures and stats now. So looking at then the January stats, the number of UK homes sold subject to contract in January 2025 was 98,978, which is a rise, just to put it into some context, of 17.2% from January 2024. So 17.2% increase from the previous January, when it was just 84,509 UK homes sold. So for comparison then, just again to put it into context, only 70,277 homes were sold in January 2023. So January 2023, just over 70,000. 2024, you had 84,509. Then obviously just last month, January 2025, 98,978. So a big jump, obviously, from 2023 to 2025. Now, this was mirrored in Scotland, as there was 5,911 homes sold subject to concluded missives in January 2024, which increased to 6,226 homes in just last month of 2025. So again, there was an increase. So it was absolutely mirrored within Scotland. Now we can break it down.
It's good though that there's an increase in the transactional numbers.
Oh, 100%.
Because and again, I'll stress this too. I mean, we know this, but other people don't know this. Is the fact that the health of a housing market is based on transactional numbers. It's not really house prices. While everybody talks about house prices, you're not really making any money on houses if you're not investing in houses and you're just buying it to live in. Because all you're doing is trading like for like. So the real strong indicator for the housing market in terms of the health of it is the number of transactional numbers actually going through. In other words, if you're selling 10,000 one month, hopefully the next month you'll sell another 10,000, because the same people that are using, the jobs and everything that goes with it are the same people working on these houses and the next set of houses they're on. So it keeps all the jobs, everybody in a job, ultimately. If the transactional numbers drop, then obviously you need less people to work in jobs associated around the housing market, like the fitters, and the plumbers and the electricians and all the rest of it, and the lawyers and the solicitors and the estate agents and mortgage brokers and banks and all the rest of that. You need less people because you're obviously selling less houses overall in transactional numbers. If you get more, then you're obviously struggling because you've not got the capacity to then deal with more mortgages, more house sales, and all the rest of it. So you have to try and recruit more people in a market which unemployment is so historically low in comparison to everything else. So it's difficult to actually attract these people, and that could inspire wage inflation, which could end up pushing up normal inflation because there's more money in the market and more people paying money into the system. Therefore, that gets out of control, and you can see how the spiral could go up, or ultimately could go down. So it is a balancing act overall.
Absolutely. So then, again, for context, looking at all the UK regions and the number of homes sold subject to concluded missives in January 2025 compared to the previous year, 2024. So East Midlands actually saw the biggest jump, with sales up 27.5%, followed really closely by East Anglia, which is obviously where I am from. So that's why I'm intrigued in this, which surged to 26.6%. Now, the Southeast also performed well, rising to 17.9%, with the Southwest not far behind at 16.9%. Now, London then saw a strong increase at 18.1%, again showing that continued resilience in the capital. West Midlands, that climbed to 14.5%. Your Northeast was up 14.1%, and then your Northwest followed at 13.4%. Now you've then kind of got your Yorkshire and Humber area. Sales increased 12.7%. Wales roughly about 13.9%. Now, probably the one that everybody's interested in is Scotland. Now, Scotland saw a more modest, we'll say, rise of 5.3%. While Northern Ireland was in the only region that actually was on a decline, down 3.4%.
It's quite interesting because Scotland will always show a modest rise. Scotland never. The housing market in Scotland and house prices in Scotland and transactional numbers in Scotland don't really differ a huge amount in comparison to England. England tends to go on huge swings and roundabouts, up and down, whereas Scotland over time tends to have a constant J curve in terms. Well, I wouldn't say a J curve. I would say more just more a curve, a smooth curve, I would say, and going up the way. A J curve's obviously straight up like that, but a smooth curve overall, and it doesn't have huge volatile swings like the English market in terms of price points, in terms of transactional numbers and that. So that's not real any of a surprise, but it's normal. It's normal for Scotland, put it that way.
So then.
What about Fife then? How did this compare, looking at Fife's picture overall?
Yeah, so we're going to break that down, and we'll start with January 2023. So in January 2023, there was 397 Fife homes sold, with an average price at sale agreed of 199,049 to be exact.
Yep.
We then come forward a year to 2024, and there was 407 Fife homes sold, with an average sale price agreed at 198,751.
Yeah.
Then January 2025, 424 Fife homes sold, with an average price at sale agreed of 204,770.
Yeah. Now that's interesting because that's January. And January tends to be a slower month for transaction numbers and everything, because people are generally just coming back to work, and everything's more or less been done in December or just prior to everybody wants in before Christmas, don't they? That's the sort of thing that they try to do. So it's interesting. So when I look at the numbers on the UK data, the Scottish House Price Index out today, the Fife area actually in October 2024 was 587 house sales. And the year before that, in October 2023, it was 504. So it actually went up as well. And it went up by almost about 20%. and from October 23 to 24. So it kind of marries in with that picture about the fact that it is all going up as a result for that reason. So it's quite interesting to see this data. Hugely unexpected. I didn't expect it to this almost like this train or this ship, I would say.
Okay.
It's kind of like I think it's more like a ship, just like the economy. It's like this big cruise ship, and you kind of have to start slowing down halfway out in the ocean to get in at the right time into dock. As a result of that, it's not a finite stop and start system. It's you just know what you need to do. Hence the reason why by the time you reduce interest rates to help the economy, you've got another 6 months of this coming, whatever it is that's coming, and interest rates are only going to make a difference at that point in time. And it'll only be 6 months in from then that you'll find out what actually happened. Hence the reason why I think the housing market is definitely to a degree kind of due for some sort of balance or correction. Not a huge amount. I mean, I'm talking about single digit figures, because you can't sustain a rising market where house prices are continuing to go up and up and up and up and up, especially after a boom, I would say. So I think we're going to have some sort of equalization, maybe in the top end of the market, where a 10% rise in 500,000, 50 grand, a 10% rise in a £100,000 property is 10 grand. So I think it's going to be more top end that's going to influence it, because affordability levels at that end are still quite high in comparison. It's quite interesting because I think I have some data here. Okay, let's look at some, let's just drill into this. I've always got data.
Absolutely.
Here we go. Share the screen. Let's share this website. This is Money Supermarket. There are other ones available, I would say. So we've got Money Supermarket there. You can see Lloyd's deals out just now. This is just based on property value, 405,000, deposit 140 grand, repayment 26 years. And you can see Lloyd's are offering an initial rate of 4.17, initial rate for 5-year fixed, which is good, definitely. You have Barclays doing the same, 4.19. You've got First Direct, 4.24. You've got Yorkshire Building Site, 4.26 to 4.27. They're all 5-year fixed. NatWest, 4.27. So it's interesting that they're all doing 5-year fixeds at the lower rates. So what is the fact? Here's the question you've got to ask yourself. What does it tell you when a bank's lowest rates across the board are all on 5-year fixed rate deals? It tells you that their outlook is that interest rates are going to continue to drop over the next 5 years, and they're better off fixing in at a 5-year fixed rate deal than out to give them a better certainty and a better return. Plus, it also tells you that the swap rates in interbank lending and also the money market is actually a lot lower as well, and that's how they can afford to do that, because that's where they borrow their money from. So they're still making a really good margin in a 5-year fixed rate deal at that rate for that reason. So it's optimism built into the banks now. They see interest rates still, or base rates or interest rates still coming down, swap rates coming down as well. But again, this data out today might shift that in the next week, I would say.
Absolutely.
Okay, so if we look at this then, and we look at house sales in Fife, I think you'd actually said they've risen by around about 4% year on year, and about 7% compared on 2 years ago. The optimism has definitely been evident among prospective buyers and sellers throughout the last 6 months of 2024. This is despite mortgage rates actually rates rising ever so slightly since the summer of 2024, and this modest cut in rates will do a lot to reduce the mortgage rates in 2025. You've just seen that right there, and thus continue demand for property. What about house prices in 2025 then?
So Denton House actually did some research on this for us, and it continues to publish the price per square foot metric on sales agreed, which has proven to predict Land registry figures 5 months in advance with a 92% accuracy. So we're going to take it. So January's final figure for the UK sales agreed stands at £342 price per square foot.
Square foot. Yeah. So if you've got a 500 square foot property, I'm not really sure what that equates to. 500 square foot property, but times that times 500, you're talking about £171,000. Probably the average size of a house then, 500 square foot. Interesting. What's 500 square foot in meters? 500 square foot and meters. Where's meters when you need it? I'm just typing that in. Feet to meters. Here we go. It's 46.45 square meters. That's roughly about a two bedroom property, I would say, in terms of the size. It's not massive, but it's definitely, and that's average throughout Scotland. Remember, I would say. Okay, so what else do we need to look at then? How does that compare to December, and how does it compare to other dates as well?
Yeah, so it does. It shows an upward trend from December, which was 339 per square foot. And that was in December 2024. Doing it a couple of months prior to August 2024, this was £334 per square foot. Then in January of 2024, it was £330, per square foot. So then, just as a reminder, we had 342 for obviously just now, and it was 330 for January last year. So that's the difference for you. So that then means UK house prices have risen 3.64% in the last 12 months.
Yeah. Predominantly, I mean, Scottish house prices, as I said before, the land registry out, they're at 6.9. But interestingly, UK house prices are less. But then that's no surprise, because remember, they're a lot larger in terms of their price point. I mean, London, for example, average price in London is, I think, last time I looked, it was like 550,000. Now compare that to average price in Scotland, which is 189.
Yeah,
it's like that. It's like night and day, isn't it?
Oh, absolutely.
You're talking about 2.6 times more than Scotland. And then when you think about what you have to earn then to be able to afford a mortgage for the same property, it could be, because it's average versus average, isn't it?
Absolutely.
Okay, what else do we need to know then?
So taking into account that even with this upswing in property market activity, we do believe house price levels are likely to remain roughly stable, but there is things that we need to consider though, especially for the Fife market. And what's great about this is it then allows us to kind of take the opportunity for reflection, whether you be a seller within Fife or whether you be a buyer within Fife. This gives us a great opportunity to look at what we can do next steps and moving forward. So for sellers, what does that mean?
For sellers, I was going to say for sellers, what sort of opportunity is it for sellers then?
So we've touched on the market is changing. You need to be more strategic. You need to be adaptable as well, while also being patient. And we've touched on this as a previous show, is just have patience.
Patience has got to be it for a seller, because it's I don't know about you, but I'm experiencing more people have homes to sell rather than in the boom market where almost everybody had sold already and they were ready to go. So it seems to have actually the transaction, the timeline seemed to have slowed down a bit. Hence the reason why you were advising probably patience.
Oh, absolutely patience, because especially obviously some of the micro regions within Fife, there is a lot of stock on the market. So it is going to take slightly longer than what people may think. They're not fully aware, and that's okay if you're not fully aware.
But my pal told me down the pub my house would sell no bother in 3 weeks.
Oh no, 3 days, not even 3 weeks. It's going to sell in 3 days.
Wait a minute, it's sold already. I've not even put it on the market.
Correct. Yes. If we had £1 for every time we heard that.
My advice to anybody that has that is to say to your pal, so what experience have you got in this market?
Or even say, are they planning on buying it then? Is it them? Are they interested? Do they want it?
Do you want to buy it? No, I don't. But it's a really attractive house. It's great. Have it, and yeah.
Yeah, but there is. You just need to have patience. As long as you are being strategic, you have the correct marketing tools, your buyer is out there. You just need to be patient because remember, you don't know when your
Do you
buyer.
think then if that's the case for a seller, they should actually go earlier? They should put their house on earlier than anticipated, just in case it doesn't go according to plan.
Oh, 100%. Absolutely. Because then as well, great, okay, so it goes to market and you get a buyer quicker than maybe the average time. Perfect.
Mm-hmm.
Take that off in your head. That's one less thing to worry about. Your sole focus can then be, what are my next steps look like? If you've still to find a property, that is your sole focus then. That then puts you in a better position for when you're going and viewing properties, because you can already say, I've secured my buyer. I'm under offer. Yeah. So you need to be in that best position because you just never know.
So if they secure their buyer,
yeah,
what should they do to avoid themselves not having somewhere to go?
They can do an extended entry date. That is an option. We can discuss that. We can either do an open entry date or we can do an extended entry date. That's for ourselves, you, your buyer, your solicitor to all work together and work towards that. Mm-hmm. But the key is communication. As long as from the offset, the people that we're qualifying and putting through your door are aware and they are communicated to. Somebody's willing to wait 3, 4, the longest we've done is 12 months. Somebody's willing to wait that length of time. If they're going to be then in your house for 10, 15 years, in the grand scheme of things, that's not a long time. As long as they know from the offset and we communicate, we can just do an extended entry date.
So then is competitive pricing then essential in this type of market just now to secure your buyer?
Oh, absolutely. Absolutely. It's all about pricing it correctly. While we don't want to undervalue your property, we also don't want to overvalue it, whether we can't even get people through the door that we can't then negotiate. If nobody's coming through the door because you're not attractively priced, then who are we negotiating with? We need to get people through the door, especially where it's only going to start picking up. More properties going to come to market, so you're going to have more competition. So if you're not competitively priced, again, you're not going to have anybody through the door, so we can't secure that buyer.
So then if we jump on, you touched on buyers. So if we jump onto buyers, what's the considerations for the Fife property market for buyers then? What should they be thinking about?
They need to get themselves in the best position. So what kind of buyer are you? Are you a first-time buyer? Do you have a property to sell? So then are you actually a seller as well? What are you as a buyer? What is making you look like a serious buyer? Have you got all your ducks in a row? Again, when there's a lot of competition as buyers out there, you need to make sure you've got all your eggs in a basket. So do you need to get a mortgage in principle? Have you even got a mortgage advisor? Again, if you do have a property to sell, why are you not on the market? What steps have you taken? You need to be all organised, looking like a serious buyer.
It always amazes me how many sellers want a buyer to be in almost like a cash buying position.
Absolutely.
But yet when they go to buy, they accept the fact that they might have a house to sell, and that should be acceptable to their seller that they're going to buy from.
Absolutely.
Doesn't make sense, does it?
Nope. It really, really doesn't, but it's something we come across. Something else for buyers as well, if you are looking for your next home. What are you doing to actively look for that next home? Are you registered with all your local estate agents? Have you called up and made sure you are on their database and qualified? Are you following their social media channels? So likewise for us, are you following the correct page for the correct area that you're looking to purchase in? What are you doing to make sure you are not missing out on any properties that are coming to market? Yes, you can look on your Rightmove and yes, you can look on your Zoopla, but there's an amount of properties that sell before going to market. How are you seeing them? So call your agents, get yourself qualified, follow them on social media. You need to be putting your best foot forward.
Just so everybody understands what that means then, because we know what that means. To man on the street or woman on the street, what does qualified mean?
Okay, so you think as if you're a seller and it's your home. Yes, you're selling it, but it's your home. You don't want just any random coming off the street. It's your safe space. So we need to get every single person qualified. So we have a conversation with them, get all of their details, do the due diligence, but also make sure we understand, okay, if you're a cash buyer. Are you actually a cash buyer, or are you actually waiting for, I don't know, a return on an investment, or is it actually, are you getting a withdrawal from your pension, or are you
have they got a mortgage in place and that's what they think they're a cash buyer for?
Correct.
It's like,
So,
you're not a cash buyer if you've just got a mortgage. It's like, that's money from the bank. You've not even got it given to you yet. Cash buyer is money in the bank, sitting waiting to be spent.
And that's what we need to understand is, are you a serious buyer? We need to qualify you to ensure that we can give all of the facts to our seller, because likewise, if you were a seller, you would want to know who is coming into your home.
I think it's especially important, isn't it? Especially if your seller possibly has a desire to complete quicker than normal because of circumstances, maybe. And then somebody comes along and says, well, I've got a house to sell. It's going to take you 6 months. And your seller wants to complete in 4 months. That's probably never going to happen, is it? If that's the case, that transaction.
Absolutely. And something we hear a lot as well is we will go, okay, perfect. What's your position? Or I'm a cash buyer. And I'm like, oh, perfect. So you've got cash in the bank. No, when my house sells, I'm going to be a cash buyer. And we're like, oh, so you're under offer then? You have
That's exactly right. And this is an interesting one as well. And it takes me back to the days of the credit crunch, where people actually thought, how do I get to move house if I can't sell my existing house? And we actually looked at this and we actually came up with a plan of, actually, you've got quite a lot of equity in your existing house. So what we can do is you can actually get out 75% loan to value, pay off your existing mortgage and have a huge chunk of money, keep that property just now and rent it, and actually buy your next house with that huge chunk of money at that point in time. Now, that was a strategy devised in the credit crunch, from the credit crunch out of need. But you can have a lesser version of that for people. So it's important. That's why I think it's important for sellers out there to speak to their estate agents to get an idea and get the right advice and base their decisions on facts, not opinions, especially not Facebook opinions, because sometimes Facebook opinions are just like, they're free for a reason, because sometimes that's what they're worth. So for buyers, it's all about presenting both challenges and opportunities for them. Some properties will still attract strong competition, but they will benefit from more choice and possible additional decision-making time. Now, we had talked about already, hadn't we, about the external factors such as the global economic shifts, inflation, which the figures out today, the interest rate changes, which could influence the Fife property market, which could it by going up, possibly. If inflation does continue to go up, there's going to be a point. Now, I think the tolerance for the Bank of England is, I was reading some reports and they did say they're kind of expecting it to go to 3.6%. So I think they'll still be tolerant with that way, but I can't see them reducing interest rates, base rates, if it goes to 3.6%, because then they're just encouraging it to go even further. It's like the ship, leaving the harbour, building up momentum, and it's like, well, wait a minute, you've got to do something now to stop well in advance before you get to the dock on the other side. And that's kind of where I see base rates at this point in time. I think the Bank of England will have a different view next month when they look at them again. So what are the key strategies then out of this for selling and buying your Fife home?
So given the current conditions, a well-planned approach is absolutely essential, and that is where your estate agent comes in. Something we've already touched on then. So for sellers, pricing, it's the most crucial factor in attracting the right buyer. Beyond that, standout marketing will always make a difference. And that standout marketing comes from your high quality video tours. And when we say video tours, we don't mean the silent movies. That's not what we mean. We mean an emotive, full in detail, depth walkthrough, showcasing the property, highlighting the potential, its benefits, it's the lifestyle that people are buying into, and that is where the high quality.
Well,
yes.
Could you imagine? You're absolutely right, and you've hit the nail on the head there. Could you imagine this video we're doing right now, everybody's listening to, and actually, I tell you what, we'll just forget about the voices and we'll just put subtitles up. We might not even put subtitles up, and you can have a guess about what people are saying. And what it's the same with a silent movie video people do for their walkthroughs. Oh, my kitchen looks beautiful. Yeah, You know your kitchen. You know where everything is. Like for example, the integrated dishwasher, the integrated wash machine, the dryer, the wine cooler. Nobody tells you that in a silent movie.
Nope.
You know your hob's an induction hob. Oh well, I could just look up the description. I could just, it's like, why do you need to do that? Most people will engage with video and a talk up on a property because it makes it so simple for them to make an easy decision without having to spend too much time to look for stuff. There is one thing I always remember. It's like, don't expect everybody to be like you when they go and look at property. Some people are genuinely don't want to spend that much time looking for all the details. So you need an agent that can actually make it so easy for someone to make a decision by giving all information all in one place. It's just simple logistics and simple logic. It creates that environment to have the best chance of your house getting the most amount of people actually actively interested in it, I would say.
Absolutely. It's a one-stop shop. It's everything's in there. It's the location as well. You've got your location tours with the digital markers, again, highlighting schooling, commuting. What does that look like? Again, it's there for them. They don't need to go and do their own research. That's what, again, we as the experts have done. Again, as the experts then, those video works. Yes, they go on social media, but it's the campaigns that come with it and the retargeting as well. That is something, again, that is that standout factor that makes all the difference. It's the interactive property listings as well. That all helps making a home stand out in a market where there is a lot of competition. So yes, it's the pricing, absolutely, but it's also the marketing. What are we doing to get them to click onto your listing?
Yeah.
So
it's quite interesting about the retargeting campaigns, because a lot of people don't understand how that works. And it basically works on the same principle as how some of the huge investment houses, for example, when you start talking about pensions, and automatically you go into social media and you see adverts for pensions because you started talking about pensions, or you mentioned it in somebody in a message about pensions. It's exactly the same principle. When you talk about buying a house, then you start to get retargeted by us. If the algorithm works out that your habits and your data suggest that possibly this could be the house for you, and that's why it gets in front of you. You have to pay to get these campaigns. Most agents don't do that at all. They don't invest any money in campaign building and funnel creation or anything like that in order to get the right buyers out at the end. And they often, as a result of that, will miss what they're doing. Now, the easy way to work that out is if you look at an agent's Facebook page and actually look at the number of views they get per post. And if it's not in the several thousands, then they're not doing retargeting campaigns at all. If it's only in the hundreds, then they're just putting it on and hoping for the best that people will see it. It really has to be in thousands, and we're talking about 5,000 to 10,000 views on a property. On a video, and if it's got that, then they're more than likely doing retargeting campaigns as a result. But it'd be interesting, speak to your agent and ask them if they're actually doing that for you to make sure they get in front of the right people. It's targeted. It's precision target marketing. I'll give you an example. It's like me taking a flyer for your property, for example, and say, this is your property, and me going on the whole of the UK and going around every door and knocking on every door and saying, do you like this property? Do you like this property? Do you like this property? How long do you think that's going to take me? But what happens with social media retargeting is they go, based on your data, I know exactly what doors to knock on. So I go to right doors and go, do you like this property, don't you? And they go, yeah, I do actually. How did you know that? That's what retargeting is all about. So it's precision target marketing to make sure you get your property in front of the right people who are potentially going to be your buyers. That's, I mean, that data and that information is gold. In fact, it's platinum, which is worth even more. Data is more valuable in the world than everything. And having access to that data and being able to retarget the right people is essential in this type of environment, especially with social media targeting and in a estate agency. We've moved into a digital era now. We're no longer an analog anymore when it comes to selling houses. It's online. It's capturing right on your phone at that point in time. That's what it's all about. So for sellers, we've discussed that. the current conditions and a well-planned approach is essential as well. But how essential is it for buyers?
So the market's different, in every part of Fife, and each area does have its trends. If you're looking for a property, perhaps in an area that has high demand, expect competition, which is why you need to make yourself look like a serious buyer. Having that mortgage pre-approval in place will provide an advantage over other buyers. If, however, you're maybe not getting as much success as you would hope for, then consider expanding your search area, or also looking at maybe some of your non-negotiables. But uncovering a potential different search area could actually give you hidden opportunities and, again, less competition. In a less competitive market, buyers do have a slight edge, as there is more kind of negotiation power on price, as well as what extras. So, are they going to leave some of the fixtures, the fittings? Oh, okay. The garden furniture, etc. That could then be perhaps open for negotiation. Each area is different. If you go and watch the Fife property market update that we do every Monday, that'll give you a great insight into each micro region as well. But one key point is that 81% of home sellers are also buyers, which is obviously you've touched on. When you get obviously sellers that don't want people through the door, that have a property to sell, but also they have a property to sell. That is an interesting fact, that 81% of home sellers are also buyers. So then on the back of that, if you achieve a lower price than expected when you're selling, you should also then gain that when purchasing on your next home.
This is the thing about, if property prices drop by 5%, then you're accepting 5% less, and guess what? Your buyer's going to accept your seller's going to accept 5% less as well, more than likely, because that's the state of the market. This is the misinformation that people really don't understand about the nuances of how the property market works overall. So as we move into 2025, how do you see things?
I see things. Well, we're going to get a lot more properties coming to market, and we're seeing that as we do the updates. So if you are looking to sell your property, then you do need to go to market now. If you're looking for a summer move, then you're kind of behind schedule, and you need to, without saying it any other way, you need to pull your finger out, basically. There is going to be more properties coming to market, and we can see that. This is your opportunity to get an agent out in front of you, ask the right questions, interview your agent, understand what your valuation is like, what your next steps are, and what, as I've touched on, each area performs differently. So what does your area look like? If you're in St Andrews, for example, the last couple of weeks, there's been a surge of properties going to market. Just last week, there was 13. The week before that, there was 17. There's a lot all of a sudden gone to the market in St Andrews, again, with not as much selling. What does that look like for you as a buyer and seller? So my key takeaway is get yourself in the best position. You need to get your ducks in a row, and if you're looking to sell, you need to do it now.
If you fail to plan, you plan to fail. Correct. Essentially, that's what it is in a nutshell. We'll leave the last word with Charlie. Charlie, what do you think of the property market, and where do you think it's going to go in Fife? And Charlie says, "Oh, hi." Thanks for that, Charlie. I see it being a bit balanced, but if you think it's going to be high, then fair enough. And that's it. Thanks very much for coming on, Sophie. Appreciate your words of wisdom. If anybody's needing to get in touch with us, please feel free to make in the comments or message us direct on these posts. Until next time, guys, it's bye-bye from us.
Take care. Bye for now.